Hello, my name is Joaquin Gretz. I'm the author of this financial calculator for the iPhone or the iPod Touch. I'm guessing that you already have the calculator since you are watching this tutorial. Otherwise, you could just go here to snipr.com/calc-download, and it will load iTunes and ask you to download the calculator. Let's see, this is version 1.3. Should be out tomorrow, but let's play around with it. Let's do something simple. Let's do time value calculations the easy way. This is the easy mode. You go here and let's say that you want to know how much $100 today will be worth in 2 years if you invested at 10%. So you say you have $100 today, 2 years at a 10%. Clicking here and you get 121. You notice that you also have a negative number here. The reason for this, if you are familiar with financial calculators, you know that cash flows are represented on financial calculator with a negative number if you are actually putting money out, what they are called outflows, or if you get money in, inflows, they are positive. So since you are putting $100, it's an outflow, it's a negative number, and you're gonna get inflow 121. This is just a formatting convention. You could actually use a positive number and just going to change the sign, as you will see here. But the right way is to use a negative for all the money that you're putting out. This is annual compound. You could do a monthly compound. For example, you see this doesn't make any sense because you're actually using 2 months now. Since you want 2 years, you have to use 12 months per year, so it's 24 in here. And then calculate it again. That makes sense, right? You're going to get 122. Now let's going to do this and the more advanced way. So $100 today, using the calculator. This is the present value at 10% for 2 years. What would be the forward value, the future value? You hit compute and what you want to compute, which is the forward value. So you see you get the same number, 121. If you want to use different compounding in here, you have to go to the settings and then it's monthly. You will use 12 in both. Usually these two numbers are going to be the same when you're doing compounding, unless you have some special mortgage like Canadian mortgage where you pay monthly, but it is compounding semi-annually, and then these numbers will be different. But for most cases, these numbers are the same. So now you compute the forward value. You see it doesn't make sense again because you're using 2 and you want to use 24 months, right? So now it's correct. You could also do this special trick. You say 2 years, you want to pass it 2 months, so you're hitting here and this key and you will get 24. If you want to make any other time value calculations, a lot of people brought to me complaining that the numbers don't make sense, usually because they forgot to reset their time value variables. For that, if you do this, you're just going to reset everything you have on the screen, but these variables are still set, so you have to clear this. So you do second and then clear time value. So all of these variables now are set to 0. Doing something more advanced, let's play with the NPV. NPV, for that you need cash flow, so you hit the cash flow key and then you enter minus 500 for the first cash flow, and then let's do I don't know, for cash flows of 200, right? So now let's calculate NPV. We say we want a 10% discount rate, and 133.97 is the NPV. If you want the internal rate of return, now that you have the cash flow, you hit this number, you will get 21.86. You could do also the same thing on the easy mode. Here you add the same cash flows so it's minus 500. And we had it 204 times, so 1 2 3 4, and discount rate 10. So you see, you get the same numbers. It's exactly the same thing. Or you could also move this around or delete the numbers. You know, you could play around. It's pretty easy. And new with this version is the loan amortization. What you do, you say you want to know how much you have to pay every month for your loans. So let's say you have $100,000 loan at 5%, and you have to pay for 15 years. So this tells you that every month you will have to pay $790, that you are going to pay a total interest of $42,000 over the life of the loan, and then you will see here every month payment. So well, you're obviously paying $790 every month, but then you're paying this interest and this principal over the course of the life of the loan. So, you know, as time goes by, you notice that you pay less amount on interest and more amount on the principal. And after 15 years, it will scroll all the way down. You pay the whole loan. The balance is zero. And that's about it. If you have any suggestions, don't hesitate to write to me to this email address, and I will try to add every request that you make to me.